Good morning, everyone. Welcome to the session this morning. It will be on designing a simple trading plan and testing it. I think this is an extremely important topic for anyone. So let's get started. Now, all trading does involve risk. So I want you to take just a few moments to read over the Nadex risk disclaimer, so that you understand that all trading does involve risk and you should never trade with money you cannot afford to lose. I also would like to do a poll this morning, and it's very simple. It's how many webinars on Nadex have you attended previously? And I just want to give everyone just a moment to answer the question for me. And of course, I have two more questions, so bear with me this morning. This helps us bring you the best webinars that you want. By answering these questions, we schedule the webinars according to what your interests are, or we try to, I'll put it that way. And I'm going to close that one in just a minute. Okay, I have another one, and that is simply, what is your experience in trading? Are you a beginner? Do you have some experience, but you're still learning? Or would you consider yourself a very experienced level trader? And again, this helps us design webinars for your level. And I have one more, and then we'll close the polls. And basically it is, which topic would you like to see more webinars on? And if you would just pick the top one that you would like to see a webinar on, maybe it's beginning level binary concepts, how to enter and exit binaries, and of course, how to design a trading plan like today. Just give you a few more seconds to finish answering this one. Okay, now we're going to get started this morning. And for those of you that do not know me, my name is Gail Mercer. I've been trading for over 15 years. Started out with a company that actually programmed indicators for TradeStation and simply fell in love with price bars. I thought that was the coolest thing. I do specialize in price action, volume analysis, and divergence because I believe they are leading indicators. I'm also a frequent contributor to Stocks and Commodities magazine, Traders World, and Top Shelf. I've been a speaker at Traders Expo, Traders World Online Expo, and the Wyckoff Volume Conference. I'm also the author of Trading Nadex Binary Options, Keeping It Simple Strategies, and New Trader's Guide to Trading Nadex Binary Options in Spreads. You can visit my website at tradershelpdesk.com, or if you have any questions, you can email me at gm@tradershelpdesk.com. Now, I'd like to get started with designing a trading plan. And I've already created more or less a template to work off of. And the reason that we need to design a trading plan is because we need to be able to replicate our good trades. Okay, so we need to first identify which markets are we going to trade. Okay, if you are a new trader and you're jumping from one market to another market to another market, you know, markets can act differently. So you might not get very good results. You can't really judge, is this working on this particular market? So what I do is I like to start with maybe 3 markets and then add to that, okay? So, you know, the first question I would have as a new trader is, which markets should I trade? Now, for most of my new traders, I actually tell them to begin with the Euro US dollar, the Aussie US dollar, and the USD JPY. Would anybody like to guess why I recommend these three markets? It's not because of volume. It's something else. It's actually very simple. Each one of those on the binary options has a strike width of 4 pips, okay? That means that as a new trader, you could go into these three markets using an out-of-the-money binary option. All three of these markets, you know, to get a 4 pip movement is actually pretty simple, okay? So these are the ones that, you know, I tell my new traders, these are the three markets I would start with because the strike width is very narrow. And, okay, they are open for a 2-hour binary for a full 23 hours a day. They close between 5 to 6 p.m. Now, why does that matter? Okay, well, some traders have day jobs. They can only trade during Asia. Okay, some traders can only trade during London hours. And then you have other traders that will trade the US market. Okay. I'm sorry about that, Ed. What I recommend is you select a 3-hour period, okay? Because you may have a day job, you need to trade Asia, or maybe your day job goes through the US session into the Asian, so maybe you want to do the London market, okay? But don't trade more than a 3 to 4 hour period max because you're going to get tired. When you get tired, you're going to see things that are not there, okay? You're going to force a trade because you're bored, because you are tired, because you simply just want to be in the market. And a great example of this is when I take a vacation, even for a day. If I am not in the markets or watching the markets, man, when I come back, I just want to be in a trade. Any trade will do. I don't care what it is. Okay. So one thing you want to make sure of is that you're doing this in a consistent way. Okay. You're always trading London, or you're always trading Asia, or you're always trading the US market. And select a 4-hour period, especially the newer you are, the more you want to adhere to that rule. Now, in this case, in my trading plan, I'm going to set my hours, and these are going to be on New York times, okay? So in this case, I'm going to say 7 p.m. to 11 p.m., okay? and then if I want to do 4 a.m. to 8 a.m., or maybe I want to do the U.S. session, but instead of the opening of the U.S. session, let's set it to the afternoon session, okay? So now I have potentially 3 time periods that I can trade. Does everybody understand that? Now, would I do all 3 as a new trader? No. Again, it goes back to, if you didn't get a trade during Asia, you may feel compelled to take a trade during London, okay? Choose, one of these time periods and say, okay, this is when I'm going to trade. Now, the next thing is your risk parameters. How many of you understand at the money, in the money, in, out of the money? Just type in yes or no. Okay, in the money is generally going to be about $70 of risk, and you have a $30 profit potential, okay? And in the money literally means price is trading either above your strike if you're long or below your strike if you're short. At the money is going to have a risk of about $50. It could be 55 with a profit potential of 45 to 50. Out of the money is usually with a risk of less than $45 and simply means that price has not yet arrived at that strike, okay? And everybody's risk parameters are different. Most of the time, if you feel like you hate to take a loss, okay, you're going to use it in the money because in the money typically has a higher probability of finishing above your strike. At the money is pretty much a 50-50, okay? It could go either way. Out of the money is your least likely to expire in the money, okay? Now, that's just using the binary premiums, okay? If you use technical analysis, okay, then your edge is coming from your indicator. Does everybody understand that? It's not coming from your premiums, it's coming from your indicators, okay? So I'm always going to use out of the money. I don't mind a loss, okay? But I want to skew the reward in my favor, okay? What does that mean? That means generally if I'm risking $1, I'm going to make $2, okay? In other words, if I take a binary that's at $30 of risk, then I'm going to try to get $60, okay, as a reward, okay, or as a profit. Does everybody understand that? Okay, so if I'm going to try to do that, the most that I can risk on any given trade is probably going to be about $30, okay? Now, could it be 31 or 32? Yeah, sometimes it's not going to be exactly at 30. A lot of times I will come in under that $30 of risk, okay? Does everybody understand that? Now, what is your entry criteria? The entry criteria, this is what actually makes it where you can replicate your trade on the market, okay? You have the same entry criteria on all of your trades. You have the same exit criteria on all of your trades. You have the same risk parameters on all of your trades. So in this case, and I'm going to show the Nadex platform, And let's just go look at the Aussie dollar, okay? And we'll do the 1 p.m. expiration. And I'll bring up a chart. Now, as you can see, I've got two moving averages here, okay? And on the moving average, what I want to see is for price to close above the moving averages. I want it to test the moving average, and I want a reversal bar to form, okay? So over here on my trading plan, I'm going to add in here, I'm using an exponential moving average, and it's set to 20 and 40, okay? Price need, for longs, price needs to close above the moving averages with a reversal bar after a retracement to the moving average. Does everybody understand that? Any questions on the long entry? Okay, Pat, did you have a question about it? And this is very, very simplistic, okay? And also remember, this is to teach you how to develop your own trading plan. What we're looking for is price needs to close above the moving average after a retracement to the moving average, okay? And it has to be on a reversal bar, okay? Now, for shorts, it would be the opposite. And short is when you're selling, okay? So price needs to close below the moving averages with a reversal bar to the downside after a retracement to the moving averages, okay? That's your entry criteria. Now, what are you going to do once that happens? You're going to enter one strike from price if risk is less than $30. Okay, and this is the same regardless of a long or short. Okay. Now, what's your profit criteria? On entry, I will set a profit target that captures $60 of profit. Okay, does everybody understand that? Now, what if it is a loss? Okay, if it is losing, let's say a reversal bar forms against me with only 30 minutes remaining, I will exit if possible. Now, sometimes that won't be possible because your risk is already low. Okay, does everybody understand that? Now, what about the ones that go in? I've written a lot of articles about this. The market tries to give you profit, but you don't take it. How can you handle that? Okay. Well, you could type in a rule for your profit, okay? If price goes in my direction, and then a reversal bar forms, and the profit is at least half of what I am trying to capture, I will exit. Okay, does everybody understand that? Any questions on this so far? Pat, can you print this page? No, you cannot. It's on my Word document, but you can go back and review the video. Okay. Okay, a reversal bar is basically a pivot bar. Okay. It's where the middle bar forms a high and the next bar closes below, or the bar has made a low and closes up, or the middle bar makes a low and the next bar closes up. And David, I do have a webinar online that you can view if you go to Nadex and go to the webinar archives. There is a video there on price bars, and that's the one you would want to watch. Okay. Now, trading limits. And this is one that a lot of, especially new traders, they say, okay, when should I stop trading for the day? Okay, is it after 2 trades, 3 trades, 4 trades? And, you know, this is the way it happens in trading. Some days you get up and everything you touch just turns to gold. Okay, I call it my golden days. When I have those days, I can continue to trade until I have a losing trade, and then I have to stop. Otherwise, if I have 3 losing trades in a row, I stop. Okay, so here I'm going to type this rule up, and it's going to be if everything I touch turns to gold, then I can continue to trade until I have a loss. Okay. Now, the reason that I like that is because, you know, if I'm having a spectacular day, I can continue that spectacular up until I have that loss. Okay. But once I have that loss, that's it. I can't trade anymore. But if I have 3 consecutive losses, I'm done. Okay. And that's usually because there's something that I'm not seeing, or I might have a bias to the market. You know, I do a lot of counter trend trading, and I can catch a bias real quick that this market's going to go down because I said it's going to go down. Okay. So I have to put in a limit there. You know, I can only do 3 trades. If they lose, I'm done. Okay. Because I've got a bias that day usually. Okay. Now, are there any questions on the rules? Generally, when I do this, okay, I'm going to do this where it will fit all on one page. Now, why do I do that? Because if you make this trading plan, especially as a new trader, if you make this so long and tedious, then guess what? You're not going to be able to trade it because you're busy trying to read what it is that you're doing, okay? You're not going to be able to follow that, okay? That's right, Marvino. When you're hot, and when you're not, you're not. You're absolutely correct. You know, I'm taking advantage of the days that, hey, I'm hot today, boys, okay? But I'm going to limit the days that I'm not, okay? Now, there's a couple of other things that you need to do. One, for all trades, you will capture for all trades. I will annotate my chart when I enter and when I exit, okay? I will take a screenshot of chart on entry and on exit, okay? Does everybody understand that? And these two are probably your most important concepts, okay? Because this is what's going to hold you responsible for what you're doing. Let's see. And if you have Nadex signal, how will be your profit? France, the profit criteria is identified right here. I'm trying to double whatever my risk was. Okay? All right. Now, this is going to be pretty easy for us to test. And I'm not worried about that. I'm not worried about the right edge today. We're going to worry about over here. All right. So let's say that we entered, let's take this one. Okay. You had two entries here that met the criteria. Okay. You had this entry and then actually it came in on this bar. Okay. Does everybody see those two entries? And again, if we go back to our entry criteria, these are longs. This is the entry criteria. Okay. So price needs to close above the moving average. Okay. It closed above the moving average here. A reversal bar after retracement to the moving average. Okay. It closed above after retracement in a reversal bar. So this is a reversal bar. And this is a reversal bar. So both of these trades met the criteria, okay? We're going to enter one strike from price if the risk is less than $30, okay? So if I go over here, I can actually, let's put that back where it was. So this one, I would say it's about 75.24, okay? So we're just going to snap a line on here. Okay. And it would be at 28. Well, let's see. Yep, I was right, 24. So we're going to put a line at 28. So this is where your strike price would be. Does everybody understand that? Now, do we know for a fact that it was $30 or less in risk? No, we don't. Okay. But let's presume that it was. Okay. In this case, if you had a profit target, more than likely the profit target would be filled. And you're looking at about 3 o'clock. So if this is the 2 o'clock bar, you're going to go over to here, and that's pretty much where your binary would be. Do y'all understand that? Now, does everybody understand how to annotate their charts? Because if you just simply click on the text, you can say entered one strike from price because price closed above moving average after a retracement. Okay? And you can actually grab a hold of this and move it anywhere on your screen. Okay? Does everybody see how I did that? And I actually have a screen capture software that I can capture my screens with. Just like that. Okay? And now I can actually go and annotate it. Okay? For example, you could put here, let's say that you exited early. Okay? You can say exited. Let me change the color of that. Exited early because price was reversing. Okay? Now, does everybody understand this so far? Any questions so far? Because now we're going to grade ourselves. All right. So now I have a spreadsheet that I actually grade my performance on. Okay. So we're going to do Aussie US dollar. I was long. And I'm not going to fill out the profit and loss because we were not in it live. And was the trading hours adhered to? Okay. Well, we were trading between 1 and 4. So I'm going to mark a yes. Was it a market that I am supposed to trade? Yes. Was the entry criteria met? Yes. Was the exit criterion met? Yes. Did I adhere to my trading limits? Yes. Did I capture the image with notes? Yes. Did I capture the image on the exit? Yes. Okay. Now, do I need to make additional notes? Maybe there was a market report that I didn't know about. Okay. I could type in here unexpected market reports. Need to remember to check. Okay. So this tells me, I may have lost money, but it might not have been my fault because I didn't check my market reports. And when you get a huge spike, normally that was a market report that you didn't know about that you should have known about. Does everybody understand that? So in other words, this is my trading plan or my business plan. This is sort of like my sales journal, okay, for a business. That's what I equate it to, okay? And I can go back at the end of the week and say, okay, I had a really bad week. Can I zero in on why? Was it the markets? And sometimes it is the markets because everybody's going to have a drawdown period, okay? Quite often you will find that it's something that you did not do that was in your trading plan, you should have done, but you didn't. Does everybody understand that? This is like your protocols for running your business. But this is what is used to say, I followed my protocols or I did not. Okay? And most of your losses will actually come because you did not follow it, or you may need to add something. Okay? For example, okay, we would enter one strike from price if risk is less than $30. What did we forget? Are we going to do a 2-hour, a daily, or a weekly? Well, we didn't think about that. Well, we got to go back to our protocol and say, okay, if using a 15-minute chart, I am entering on a 2-hour binary. If using a 60-minute chart, I am using a daily binary. If using a 240-minute chart, I am using a weekly binary. Okay? Why 2 moving averages is just an example, Chuck. Okay? I trade support, resistance, and divergence. Okay? There's people in the room that would never understand that. Okay? Every trader in here will follow a different methodology, and that's fine. This is just an example of how you take your methodology and put it into a trading plan. All right. So now we have identified the markets that we can trade, the hours we can trade, our risk, okay? We have identified our entry. We've identified which binary we will trade and will not trade. And we've even got a spreadsheet that actually tracks whether it kind of holds us accountable for what we're doing, okay? And I know a lot of traders, they jump from one thing to another, okay? But statistically, to really say this method works or this method does not work, you need about 650 trades, okay? That's minimum. And most traders do not make it through the first 20 because they're jumping from one thing to another. They're not holding themselves accountable. I mean, I was guilty of the same thing. Yeah, I would put something on my chart, and the minute it started losing money, man, that's it. It doesn't work because I lost. Well, loss is part of trading, okay? Mike, it's everybody. You know, I have trained hundreds of traders, and all of them, you know, will tell you exactly the same thing, okay? You will trade something as long as it makes you money. The moment it starts losing, that's it. You're out of there, man. But it's part of trading. And that's the reason that I actually do the risk to reward that's skewed in my favor. You know, I don't feel like I have to be a perfect trader because, look, and this is just basic math, guys, okay? If I do 100 trades, okay, if I lose 50 at $30 each, okay, let's put 32. That includes the commission, okay? So I'm going to make this a negative. Okay, but I make 60 on 50 trades. Well, again, let's go and make that 58 to cover the commission. Okay. Now, mathematically, if I do that at the end of the month, guess what? I will still be positive. Do y'all see that? I only have to achieve a 50% ratio win-loss. But what have I done? I have built a trading plan around not being perfect. Do y'all understand that? It's all about numbers. But what if I take a trade that's at $40 of risk? I didn't follow my rules. Does everybody understand that? So it wasn't really the binary fault. It was my fault because I didn't follow my trading plan. My trading plan is designed for a risk to reward that is skewed in my favor. And this is the thing, you know, with trading. When I say, okay, you have a 50% win-loss ratio, does that mean 50 winning trades all of it at once or 50 losing trades all at once? It could mean either one. Could you sit through 50 losing trades before the winning trades kicked in? That's the question. What if you stopped at 20 where you never gave a chance for those probabilities to kick in? I actually did a coin toss, doing 100 coin tosses because it's 50-50. And I was actually surprised because it does work out. It's all about numbers, though, and holding yourself accountable. If you're just jumping from support and resistance over to, let's say, the MACD, and then you go from the MACD to a linear regression channel, and then you go from a linear regression channel to divergence, okay? All you're doing is jumping around. You're never giving it a chance for your trading plan to work. Does anybody in the room know who Linda Bradford Rashke is? She's a really great commodities trader, futures trader. She's been around longer than I have. I attended a presentation that she did in Las Vegas one time, and she was telling us that her and MIT, they got together and they designed a trading plan. And there was a group of traders, and they all had to trade this plan. And it was based on moving averages, okay? And what was ironic is that it was successful. Why? Because they were forced to follow the rules. Even after losing money, they were forced to follow the exact same rules. And they made money, okay? Because they followed their trading plan and they followed the rules, and they didn't get upset when they had 10 losing trades. They just got up and did the same thing the next morning. And that's pretty much true in trading. You know, I'll go through a week where I lose money. Everything I touch, it just loses money. But then everything I touch turns to gold. And those are the ones that we love. We wish we could have those every day, but it's not realistic, not in trading, because you're dealing with a market that is ever changing. Every second of the day that you're in that market is changing. Yeah, it's Linda Bradford Rashke. Yeah. And the problem is, you know, especially for traders, it's very easy for new traders to say, it doesn't work. Why? Because you don't have to be accountable for what you're doing. You know, it's very easy for me to say, it didn't work, when really I know it's because I didn't use the rules. I broke the rules. That's why it didn't work. Now, any questions this morning? And again, I want to stress this. This trading plan is not designed for you to go out and trade. It's designed to show you how to create one. Okay? Does anyone have any questions this morning? And there are a lot of people that, you know, hey, they don't want to take losses. Okay? I'm not that type. But if that is the type of trader you are, you really need to skew yours at the money or in the money, depending on what your win-loss ratio is. Okay? I like the 40 better, Sharon. That's really the bottom line. I mean, there's nothing magical. You could use a 50, you could use an 80, you could use 100. You know, and again, this goes back to, we think there's magical numbers. Look at all the Fibonacci's that are used. Okay? There are no magical numbers. It's what you follow that is magical. Well, thank you, Mike. I appreciate that. The entry is really, in this one, is very simplistic. Its price needs to close above the moving averages with a reversal bar after retracement to the moving average. In other words, let me get all this out of the way. Okay. In other words, it closes above a moving average, retraces back to the moving average on a reversal bar. You go one strike out. This is really, really simplistic here. And you can make it complicated, but most of the time, especially if you're a new trader, guys, keep it to one page. Why? Because you need to be able to implement it on the live edge of the market. Okay? If you cannot implement your trading plan, then, you know, something is wrong. You can't follow it, you know. You know, if you're over here and this is a great example, okay? If you're over here trying to read your trading plan and then you look over here, chances are it's already moved, okay? It's literally already moved. All right, any other questions today, guys? And again, take something that you understand, okay? And design your trading plan around what it is that you understand. You know, I know a lot of people trade the cloud indicator. I can't say the name, Ichimuchu or something like that. But, you know, design your trading plan around it. Okay? If you like Fibonacci's, design your trading plan around Fibonacci's. You know, when you go into Nadex, just look at all of the indicators, you know. You've got the awesome oscillator, the Bollinger Bands, the price oscillator, the directional movement, the Donchian channel. There's that one with the cloud. You've got the Keltner channel. You know, I like the stochastics. You've got the parabolic. That was designed by the same person, Wells Wilder. I like him. He's really good. You've got the RSI. You know, find one that makes sense for you, okay? And then design it around there. You could use pivot points, okay? Very easy to use the pivot points, okay? Do you see how price is below the pivot line? Okay, that tells you down, okay? Wait for a retracement and a reversal bar. There it is. How many entries have you had today just off of this simple little one? Here's one, here's one, here's one, here's one, okay? And don't trade once it's below the S1. You know, this is really simplistic. Below the pivot line, go short. Above the pivot line, go long. Okay? Very simplistic. Okay? If it moves above the pivot line, it will come back to test the pivot line. If it tests the pivot line and it forms a reversal bar, go long. Okay? That's simplistic. Okay? And if you are new, you need to focus on simplicity. The binaries are much more forgiving than the futures and the forex, okay? Because we have limited that risk on entry, and it's extremely important. All right, if y'all don't have any other questions, then I'm going to say thank you for attending this one, and I hope to see you next Wednesday as well.